Good morning and welcome to the Monday Morning Wrap. I'm Greg McKenna and here's your quick roundup of everything that happened on Friday night and is happening this morning in Asian markets. Stan Fisher was the Fed Vice Chair, was the big story of Friday night. He gave the market a clear indication that the September meeting is in play. He was a bit balanced. He didn't necessarily say that they will tighten. He left the door open for a no tightening. He was somewhat dovish. But I guess when you look at the strength of the US economy, that GDP that was increased last week to 3.7% for Q2, up from just over 2%, you've got a US economy that's doing well. That makes non-farm payrolls on Friday night very important. But what we've seen in Asia early doors this morning is we've seen some selling in US futures, which are down a little bit, and we've seen that crude is off a percent, back at $44. I think the key thing that happened last week was that we sold off to acutely oversold levels, and then of course we bounced and we've had that technical reaction. And so on Friday night, US markets struggled to get either side of flat. They were down for a lot of the day in volatile trade, and in the end the Dow finished just in the red. The S&P and the Nasdaq did a little bit better, with the Nasdaq up 0.32, but the S&P was flat as well. The only real major index that did well was the FTSE in London, which was up 0.9%. That's an interesting night's trade in Europe and the US after some strong rallies in Shanghai, but that seems like the government's been buying since Thursday, and in the Nikkei as well. The Nikkei is probably going to like the fact that dollar yen's back at 121. But whereas it was closing in on 122 earlier this morning, the weakness in US futures has seen that sell off a bit. My sense was last week, and I said it, there was going to be a 150-point rally. We got pretty close, where we got back to towards where I thought, within 10 points of where I thought the rally should run into some pressure. It's ran into some overhead resistance now, and I'm a seller on rallies over the course of the week with all the data flow. On foreign exchange markets, the euro was back under 111 earlier today. It's up a little bit today, up a little bit now, back at 112. That's 5 big figures below where it was at the height last week, above 117. Sterling is at 154 odd, dollar yen 121.20. The Aussie's at 71.40. It's off of around 0.5%. As risk aversion takes hold in early Asia. You can never trust early Asia. It's one of those times in the market week where realistically it's very thin. We're reacting to what happened over the weekend, maybe to what Asian traders think Stan Fisher meant, but realistically tonight is where the rubber hits the road and most of the direction is going to come from. Let's just quickly have a look at some of these charts. I'm going to have a look at the monthly S&P. Today's obviously the last day of the month, and so what we could see is a further weakness. When I look at this chart, this is the S&P here. When I look at this chart and I look at this top and I see this big sell-off here, and obviously it's found support around the similar sort of region to where it did on the last big sell-off. And then I look at my MACD and I look at the weekly chart or the monthly chart there. It reminds me very much of the way gold did back here. We had this similar sort of the MACD coming down. Obviously, as you saw with gold, you find some support levels. You can even rally up before the cascade lower. My sense is that we've had a fundamental shift in the outlook for the S&P 500. You can see on the weeklies that was a fantastic rebound, and you can see that where the support came from. It was oversold, but if you look at it on a daily basis, I was expecting it to get back to around 2000, and it got back to around 1996. So from my point of view, that's a pretty solid rally. Now, this is still oversold when you think about it, and this could continue to rally. So it's just really a question of, it could rally to 235, something like that. But overall, I'm a seller on that one. Interestingly, if we quickly look at oil, we've had a fantastic rally. That's a monstrous rally from 37.75. I think the low was up to above $45 today. Friday night. a good solid rally. Possibility that goes a little bit further. We got the extra couple of bucks I was talking about last week, and it rallied further. It's a little bit weaker today, and we'll have to keep an eye on that. But that looks like a subtle trend change, and maybe 47.50 might pull it up. But overall, I'm a seller in that, because I think that the oil price, where it is, simply reflects a reality that global demand's weak. Now, it's going to be a big week this week. We've got a lot of data in Australia. We've got the partial indicators of GDP before we get the actual GDP result on Wednesday. The range is from negative to plus 0.7, so it's a difficult one to predict. As each number comes through over the next couple of days, you'll get the banks refine their forecast, but somewhere in the 0.4 to 0.6 range looks like the most likely outcome at the moment for Australian GDP. That's not very strong when you think about it. If it's 0.4, it's 1.6% per annum in US terms. If it's it's 0.6, it's 2.4. So in that region, it's still an economy that's muddling through. That could put some pressure on the Aussie dollar, but it's unlikely that the RBA is going to be putting any pressure on the Aussie dollar tomorrow. They're likely to hold rates steady, and to say that something along the lines of that the Aussie has reacted to the fall in commodity prices. Speaking of which, the CRB bounced 2.32% on Friday. Gold's up at $1,132. If we think about what else is on the horizon this week, as I mentioned earlier, non-farm payrolls is going to be huge, and I think that the market's looking at around a 215, 220 print. National Australia Bank co-head of foreign exchange, Ray Attrell, said today that each of the last 3 Augusts has undershot market expectations with an average of 170,000, only to be revised up to an average of 219,000 subsequently. So the US might have some problems with their seasonal adjustment factors over there at the moment. So don't be surprised if we do get a lot of market reaction this Friday. But that's a long time away. We have to get through the trade today. The Aussie market was up slightly in futures trade on Friday morning, but with US futures down a little this morning, there could be some pressure on it. Iron ore looked okay over the weekend. The rally in copper and the rally in crude will have helped, but crude off in early trade might mitigate against that. So I'd be expecting a flat to down day on the ASX today, and I think that its bounce is, still could head up towards the sort of the 53.75, 5400 level, but that would be about it in Aussie dollar terms. It's very oversold at the moment, so not going to sell it outright again yet, but certainly looking to sell rallies. Anyway, that's it from me today. Good luck, good punting, stay safe. It's still very volatile out there. A lot of talk about what the Fed's going to do as the data flows over the course of the week. Of course, we've got Chinese manufacturing PMIs tomorrow, both from the National Bureau of Statistics and from market. That's probably the most important figure in the next sort of 24 hours or so, 26, 28 hours. So keep an eye on that. But in the meantime, just trade the ranges. I'm Greg McKenna. Have a great day. Bye for now.